A warm welcome to my YouTube channel. Thank you for keeping in touch always. So it is a continuation of your previous video which I have presented, that is your auditing. In the previous video, I have told you about what is your auditing, what are the definition, what is the origin, and again what are the various features of your auditing. And today in your next slide regarding your auditing, we are going to continue with what is the difference between your accounting versus auditing and what are the various objectives of your auditing. Okay, shall we move on? So this is the slide which gives a very clear picture of understanding what is the difference between your accounting versus auditing. Many of you have a doubt what is accounting and what is auditing. Now you can understand the difference very clearly. The accounting, it is a continuous process carried out in a particular accounting year. Auditing, it is an one-time activity after the closure throughout the year. So once it is used, you are going to close it in your auditing, but the accounting is a continuous process. And then in your case of your accounting, there is no prescribed qualification is required for the accountant or the accountant for the audit. But in case of your auditing, he must be the member of the institute to be a chartered accountant to become an auditor. And then an accountant is an employee of the company. He is treated as an employee. But in case of your auditor, he is an independent professional. And then accountant gets regular salary for his work. But in case of your auditing, the remuneration for his professional work which is carried out is known as your audit fees. Once he is completing the work, we will be paying out with the audit fees. But in case of your accounting, the accountant will be getting a regular salary. And then in your accounting, it is concerned with the recording of business transaction systematically. We will be recording all the transactions systematically. In case of your auditing, it is concerned with the verification of accounts prepared by the accountant. Okay, and then next one is your accounting precedes auditing, but auditing succeeds with your accounting. So only when your accounting is completed, the auditing can be carried out. So from this slide, you can understand main difference between your accounting auditing is it is a continuous process. Here it is an one-time activity. Here no prescribed qualification is required, but here he should be a member of an institute of a chartered accountant. Here the accountant is an employee. Here the auditor is an independent personnel. Accountant is getting the regular salary, but in case of auditing, he is getting only the remuneration as audit fees. Accounting is systematic, but in case of your auditing, it is only when it is necessary we are going to do it. That is only the verification of accounts is done. Accounting precedes auditing, but auditing succeeds your accounting. So this is the basic difference between your accounting and auditing. And the next one is regarding your objectives of your auditing. The auditor are basically concerned with verifying whether the account exhibits the true and fair view of the business. This is the basic objective of any auditing. But the objectives of auditing depends upon the purpose of this appointment. Okay, it may be differing from one organization to the another. The primary objective of any auditor is to respect to the owners of his business, expressing his opinion whether account exhibits true and fair view of the statement of the affairs of the business. And it should be remembered that in case of a company, he reports to the shareholders who are the owners of the company and not to the director. The auditor is also concerned with verifying how far the accounting system is successful in correcting the recording transaction. Next one is regarding your accounting policies and practices. You should have whether see whether the accounts are prepared in accordance with the recognized accounting policies and practices and as per the statutory requirements. And again, deduction and prevention of the errors, the main objective. Errors or the mistakes committed unintentionally. We are not going to do it very intentionally, so it is unintentional errors. It because of the ignorance or the carelessness. So that we are going to deduct and we are going to prevent it in the future. We are going to give the suggestions to prevent in the future. So this errors, it may be of two types. Already you know when we are having a clear picture of your accounting, we can understand that one is your error of omission, another one is your error of commission. The error of omission or the errors which arise on account of the transactions into being recorded in the books of account, either wholly or partially. If a transaction has been totally omitted, it will not affect the trial balance, and hence it is more difficult to deduct. On the other hand, if the transaction is partially recorded, the trial balance will not agree. So we can easily deduct that error. So this is the type of error of omission. And the next one is your error of commission. When incorrect entries are made in the books of the accounts, either wholly, partially, such as errors, or known as error of commission. If you want to give a proper example, wrong entries, wrong calculation, postings, carry forwards, etc. Such errors can be located by verify. And it can also be recorded compensated in the future. And next one is your compensating errors. When two or more mistakes are committed which counterbalance the each other. For example, if amount is wrongly debited by 100 less and wrongly credited by rupees 100, such mistakes will compensate one and another errors. That is compensating errors. Then error of principle. These are the errors committed by not properly following the accounting principles. They arise due to the lack of knowledge of the accountant. One is a revenue expenditure may be treated as a capital expenditure. So that's why we need the professionals should understand and they should have a clear knowledge about of the principles and the procedures. It has to be recorded while we are going to record the transactions of the organization. Then finally the clerical errors which arises as a human, it arises which arises on account of the ignorance, carelessness, negligence, etc. So this type of errors to be avoided in the future, and we can have the audit done properly, and automatically the verification and true value of the true and fairness of the particular transaction, it will be reflected properly in the particular accounts, and we can have a good business running. Thank you. Again, we will continue in your next slide regarding your next topic regarding your auditing. Thank you.